Hey everyone, welcome back to Corporate Dakota, the place where we pull back the corporate curtain and see what is really going on under the hood. Today we're diving into a financial report from T. Rowe Price Retirement Funds, Incorporated the Retirement Blend 2015 Fund to be exact. And let me tell you, this report for the 30th of November 2025 has some interesting bits and pieces that tell a story about how this fund operates. Before we dive deep, if you get value from these breakdowns and want more straight talk about corporate finances, make sure you hit that subscribe button. And hey, we have a thriving community over on Discord where we break down these filings even further and share insights. It is linked in the description below, so come join us. So what exactly is this report we're looking at? It is a certified shareholder report for a registered management investment company. Think of it as a detailed checkup for the fund, showing how it performed, how its money is invested, and what the costs were. It is filed with the US Securities and Exchange Commission, or the CC as you'll often hear it called. This particular filing covers the period from the 1st of June 2025 to the 30th of November 2025. It gives us a snapshot of the fund's health and activities over those 6 months. Now let's talk about what it costs you to invest in this fund. For the investor class of the Retirement Blend 2015 fund, based on a hypothetical $10,000 investment, you would have paid about $18. That is a 0.34% cost. For the I class, which usually requires a much larger initial investment, the cost for the same $10,000 was about $10 or 0.19%. So the I class is definitely more cost effective if you can meet that higher investment minimum. The fund's total net assets as of the 30th of November 2025 were $150,504,000, that is $150.5 million. This is the total value of everything the fund owns after accounting for any debts. The portfolio turnover rate was 13.6%. This means that about 13.6% of the fund's holdings were bought or sold during this period. A lower turnover rate generally suggests a more buy and hold strategy, which can sometimes lead to lower trading costs and potentially better tax efficiency for investors. Let's see where the money is actually going. The fund has a pretty balanced allocation. About 35.2% is in domestic equity funds, meaning stocks right here in the United States. Another 35% is in domestic bond funds. So that is US bonds. International bonds make up 13.3%, and international stocks are at 12.9%. They also hold about 3.6% in short term and other investments. This diversified approach aims to balance growth potential with risk management. When we look at the top 10 holdings, we see that this fund largely invests in other T. Rowe Price funds. This is a fund of funds strategy. The top holding is the T. Rowe Price QM US Bond Index Fund at 15.2%. Following that is the T. Rowe Price US Limited Duration Tips Index Fund at 13.8%, and the T. Rowe Price Equity Index 500 Fund at 13.0%. This shows a significant commitment to US equity and bond markets through index tracking funds. Diving into the financial highlights, we get a look at the net asset value per S-hair for the investor class. It started the period at $10.09 and ended at $10.95. That is a gain of about 86 cents per S-hair from investment activities. For the I class, the net asset value per S-hair went from $10.11 to $10.97. That is also a gain of about 86 cents per S-hair. The total return for both classes for the 6-month period was around 8.5%, which is quite solid. The expense ratios are worth noting. For the investor class, the gross expenses before any payments by Price Associates were 0.34%, and the net expenses after those payments were also 0.34%. For the I class, it was 0.19% for both gross and net expenses. This indicates that T. Rowe Price is covering some of the expenses directly, which benefits the shareholders. Now let's get into the nitty-gritty of what the fund actually holds. The portfolio is divided into bond funds, which make up 48.3% of assets, and equity funds at 48.1%. They also have 3.6% in short-term investments. Looking at the specific bond funds, the largest holdings are the T. Rowe Price QM US Bond Index Fund, valued at $22.8 million, and the US Limited Duration Tips Index Fund, valued at $20.7 million. For equity funds, the T. Rowe Price Equity Index 500 Fund leads with a value of $19.5 million. It is clear, this fund is heavily weighted towards US market indices with a mix of bond and stock exposure. A notable section here is the one on affiliated companies, because this fund invests in other T. Rowe Price funds. Those are considered affiliated companies. The report details the net realized gain loss, the change in net unrealized gain loss, and the investment income from these affiliated funds. For example, the T. Rowe Price Equity Index 500 Fund generated $106,000 in investment income and had a change in net unrealized gain of over $2.5 million. This section helps us understand the internal workings and associated gains and losses within T. Rowe Price's own funds. The statement of assets and liabilities gives us a good financial overview. As of the 30th of November 2025, the fund's total assets were $150.981 billion after accounting for liabilities. The net assets are $150.504 billion. Breaking down the net assets per S-share, we see the investor class had about $52 million in net assets and shares outstanding of roughly 4.75 million. The net asset value per S-share for this class was $10.95. The I class was larger with approximately $98.5 million in net assets and nearly 9 million shares outstanding. Its net asset value per S-share was slightly higher at $10.97. This difference in net asset value per S-share between the two classes is normal and is related to their differing expense structures. Looking at the statement of operations for the 6 months ended the 30th of November 2025, the fund generated $2.035 million in net investment income. They also saw a significant increase in net realized and unrealized gains from investments totaling $9.243 million. This resulted in an overall increase in net assets from operations of $11.278 million. This is a strong performance indicating the fund's investments are growing in value. The statement of changes in net assets shows how the fund's net assets grew over the period. For the 6 months ended the 30th of November 2025, the fund experienced an increase of $23 billion, bringing the total net assets to $150.504 billion. This growth was primarily driven by new investments and the positive performance of its underlying holdings. This section details the accounting principles used by the fund. It is important to know that these financial statements are prepared using generally accepted accounting principles in the United States, or GAAP, and involve estimates made by management. While management strives for accuracy, actual results can differ from these estimates. This is a crucial part for understanding how the fund is managed. The fund is managed by T. Rowe Price Associates Incorporated, which is part of the larger T. Rowe Price Group. This means the fund invests in other T. Rowe Price funds and uses T. Rowe Price services for management, administration, and distribution. The report details the fees paid under the investment management agreement and notes that the fee is an all-inclusive annual fee that covers operating expenses except for certain items like interest and taxes. The effective fee rates were 0.34% for the investor class and 0.19% for the I class. This note addresses potential risks and uncertainties that can affect the fund's performance. It mentions unpredictable events like environmental disasters, geopolitical developments, and public health crises. These events can cause instability in global markets, leading to reduced liquidity and disruptions. The fund acknowledges that its performance could be negatively impacted by such events. So, what is the story here? The Retirement Blend 2015 fund from T. Rowe Price operates as a diversified fund of funds with a significant focus on US equity and bond index funds. The fund demonstrated solid performance over the 6-month period with a healthy increase in net asset value and a positive total return. The expense ratios are competitive, especially for the I class. The strength of this fund lies in its diversified approach and its investment in well-established index funds offering broad market exposure. The slightly higher net asset value per share for the I class compared to the investor class reflects its lower expense ratio, which is a positive for those eligible to invest in it. The fund's performance is directly tied to the performance of the underlying T. Rowe Price. Funds it holds, one key risk as highlighted in the report, is the potential impact of unpredictable global events. While the fund itself is managed prudently, its performance is inherently linked to market volatility and broader economic conditions. In conclusion, the Retirement Blend 2015 fund appears to be a well-managed, diversified investment vehicle with a clear strategy. Its reliance on other T. Rowe Price funds means its success is directly correlated with the quality of those underlying investments and the overall market performance. For investors seeking broad exposure to US markets with a balanced approach and reasonable cost, this fund is definitely worth considering. Alright, that is our breakdown of the Retirement Blend 2015 fund's latest filing. What are your thoughts on this fund and its strategy? Do you think a fund-of-funds approach is the right way to go, or do you prefer to pick individual stocks and bonds? Let us know in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives like this. And again, don't forget to join the conversation on our Discord server. Find the link in the description. Thanks for watching, and we'll see you in the next one.